Tom Cloud with this bi-weekly precious metals market update. I want to get right to the point here. I've been working with an investor who is leaving a big company with a 401k. 401ks are very misunderstood in the physical silver and gold market. If you have a 401k, they're either set up by a brokerage firm or an insurance company, and they don't let you. You can buy an ETF of gold or silver in most 401ks, but you can't buy physical gold or silver. So what usually happens is when someone starts rolling out of a company, they get of age of retirement, they're ready to retire, they want to keep some money in stocks and bonds, they want to put some in physical metals, so they have to set up a self-directed precious metals IRA. So we just finished one where a client had a substantial amount of money, he's retiring, so he rolled it over to two self-directed IRAs. One he put stocks and bonds in, and one we helped him get a custodian. We became his representative and his broker and helped him get the custodian for the self-directed precious metals IRA where he could own physical gold, silver, platinum, and palladium in that and have that. So as you come out of your thing, and in some 401ks, we did one in about 8 or 9 months ago, you can borrow money from your 401k. So let's say you feel you want to diversify into gold and silver, or you think it's going to move a lot faster than the stock market and bond market. So let's say you go and you borrow $50,000. You may have 150 or 200 in there, 100 in there, but you go borrow 50,000. So now you take the 50,000, you buy the precious metals, and somewhere in the future, you pay back the loan. Now, some of these 401ks say you've got to pay annual interest. So maybe the interest rate is 3%. So you may have to pay them 3% of 50,000, but you're paying yourself interest rate. You're paying your own 401k account. So you have the physical gold and silver, you're paying the loan on it. Then at some point you sell the gold and silver, pay the loan back, and hopefully have a good profit from doing that. And we have been involved in that several times also when the client borrows from his 401ks. Now let me say this, we've also had numerous times the administrator of the 401k will not give a loan to that so you've got to be sure that your 401k provides for a loan provision that you can do that with. So it's not really that complicated, but there is more money stashed away in 401ks, and a lot of people feel when there is a serious problem with the government, that's going to be the big pool of money that they take. They'll just take it from you. I know it sounds impossible, but certainly we've seen stranger things. So it's always prudent to be diversified. So we would urge you to either close your 401k, roll it into two if you're left the company. Don't just keep it there. Take advantage of diversifying your portfolio through precious metals and physical. You take physical possession. And once again, we've said many times on the show, we have the lowest storage rates in the world. We'll help you set up storage rates that we can't even mention on the internet. You'll have to call us up. And you can talk to Dan or I about it. You can call us at 800-247-2812. That's 800-247-2812. And we can talk about that. We continue to hear two schools of thought on where gold is going next. It's stuck right in that 1490 range, 1,490 per ounce. Something is going to break out at the end of October and early November. We're going to take out 1550, then all the way up to 1650 by the end of the year. There's a lot of talk about the smaller countries starting to buy physical. And while they would not be the tonnage we see now from China and Russia and other countries that are buying because they are a tier one investment and count on the bank's balance sheets as the market value. So gold's right there with government bonds. I mean, it is the strongest, safest thing to have part of your money in. And if you do believe the government, when they have problems, will freeze 401ks, you won't have the liquidity, they'll make you stay in investments, then certainly you need to be moving, and we can help you with that through all these things we've talked about today. The divide the 401ks up and getting the precious metals, self-directed precious metals IRA. And then if you want to store it, we'll work with you on the store it. If you want to take a loan from your 401k, you'll have to check with the administrator to see if your 401k allows it. But hopefully I've answered these questions that have come in about this, because I would say today it's more important than ever. And to finish my last thought, a lot of people think the first quarter is going to be unbelievable. The first quarter of 2020, we're going to see gold up over 1650. And because it is an election year and it's usually good for gold and silver, we're going to see gold take out its all-time high in the 1850 range and silver to get back into the 20s. And certainly we believe silver is going to go way above its highest ever $50 that took place back in 1980 during the Hunt brothers trying to corner the market through using future contracts. So we're excited about where gold and silver and platinum are going. We are very excited to have this as part of your portfolio. And this has been an incredible year for gold and silver, both of them up in the 15% range. And next year, we think we'll see a really incredible year, because the election year, the federal budget deficit has exploded. We're now hearing the real deficit is about twice as high, and this will be exposed in 2020. So stay tuned. We do these shows every 2 weeks, and you can tune in and get them. But once again, if you have any questions about anything I've mentioned, just call us at 800-247-2812. With this bi-weekly precious metals market update, this is Tom Cloud signing out.